Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right. Good morning, everybody. Welcome back to another live stream. I hope you're doing well. I hope you're trading safe. And I hope that you're staying patient with some of these markets. A lot of stuff is moving nowhere. Some stuff is moving a lot. Some stuff is moving a lot less. Gold's moving today. You have gold moving lower here today, continuing to push down further. I am potentially looking at a situation in which I might get trailed out of my position. We'll see. Price has pulled back a little bit, right? Come down into this area. The question now becomes, can it hold this area of support? I have a long position that has come back against me. And I just quickly want to discuss, this is the downside to trailing stops. When you guys, watch a video or a stream where I'm talking about a really big winner, obviously that's more fun for me to talk about. But there's also situations like this where I had a really good winner and I'm sitting here watching a lot of my profits get pulled away from me. And it wouldn't be fair if I only ever talked about trades that are going well. This is a trade that was going well. I trailed my stop loss and I put it right below structure. I've been doing this for a long time on YouTube. And as you can probably imagine, or maybe you're already having this thought, Nick, why didn't you lock more in on the trade? You should have locked it in. It would have been, you could have taken profits and it would have been, I've gotten those comments for years. And before I know that's a natural question, why didn't you close it? But you have to acknowledge when you are having a hindsight thought, right? When you are thinking in hindsight as a trader, stop yourself and pause and just say, without hindsight, why did you do that, right? Or why did you do it a certain way? So I've been looking for a higher low on gold in order to trail stops further into profits, right? So when we look at gold moving up substantially, I was looking for some sort of either a breakout through these highs in order to trail a stop loss further, or a higher low to form on the daily chart. And so we didn't get that. Instead, now we see price coming down. And it is easy in isolation to look at a trade gone right or wrong and say, this is how I'm always going to do it from here. I say that because I know what it's like for many traders, myself included, who chase their tail with their strategy. They change what they're doing based on what the market has been doing. So in this circumstance, there's a temptation to be like, well, instead of using market structure, you should just trail it based on anytime you get a big move, you should be, 1% below. That should be where your stop loss is. And the problem is, in this example, that might have been the right play. But as a trader, you have to think about what you're doing over the next 1,000 trades, not over this trade only, right? So have I given back some gains on my gold trade? Sure. Is there a possibility that this actually ends up being a very small profit for me? I'm out of the trade. Very possible. But you have to rewire your mind a little bit when you're trading, because it's really, really easy to say, oh, I need to trail tighter because trailing loosely means I give back too many gains. Maybe in this circumstance, but trailing loosely also means sometimes you hold on to some monsters without getting whipped out of the trade. Everything has a pro and con in trading, every single thing. time frame selection, strategy selection, trend following, mean reversion, fundamentals, technicals, sentiment. Every single thing in trading has a positive and it has a negative. You are not going to find a system in which everything is good. You make big wins with a high win rate. Doesn't exist. You're going to have to kind of find a system that you are comfortable enough to accept the pros and the cons. And for me, trailing stops with a relatively loose stop loss has huge pros and it has huge cons. So there is a possibility. Now, gold could reverse. Like, we could find support. That's why I've got my stop where I've got it. If price can hold this, then excellent. I'll trail a stop further, see if I can catch, that leg move higher. But if it doesn't, if it breaks lower, so what? Take a profit, move on. That's it. So that's just a little bit of trading psychology as well as technicalities of what I'm doing with gold here this morning. I do think it's really important as traders we sort of acknowledge that is a lie that a lot of traders tell themselves. So I need to, I should have done this. If you could remove these words, should have, could have, and would have, you should take these words and throw them off of a bridge. As a trader, that is the better call, I think. So anyways, they're no good. These words will just get you in trouble. So yeah. James, if it's possible, could we take the Telegram QR code off the screen? I'm wondering if I can move that. Can we move that over to the left-hand side? That would be so cool. So I'm looking at gold here, up 0.85%. I'm sorry, down 0.85%. If gold shoots down another 1% from here, I'm going to be taking a small profit on this trade. Not glamorous at all, not an exciting trade, but just another trade to take. Today, I'm also going to be taking a look at a chart request for a member in our Discord VIP group who asked for me to discuss the euro pound trade, which has gone totally wrong for me. Look at this. What are you doing, Nick? I'm short here. I'm short here. I'm short here. And I'm thinking about taking another short. Am I a madman? Am I insane? Well, let me talk a little bit about it. Because again, today we are talking about trades gone wrong, because I've got a couple trades that are not doing well. And I think, I hope that by talking about trades that have gone wrong, we can learn more. There's a lot to learn from trades gone wrong. Everybody wants to talk about trades gone right because it's more exciting and everybody wants to talk about making big wins. But what do you do when a trade goes wrong, especially with my trading style? So just for context, right? I am down on euro pound, a whopping total in my account. I'm down about 1% in drawdown between all three trades. So my drawdown right now is absolutely tiny on euro pound. So you might say, well, how? How can you have euro pound short positions going against you like crazy, and yet you're only down 1%? Well, it is the secret weapon. It is a secret weapon to trading profitably in FX and in every market. Small positions. That is it. This is the secret. It is out in plain sight. The biggest secret in financial markets is trying to chase big gains is what causes people to lose money. The biggest secret is out in the open. Slow and steady wins the race. So I have small positions on the short side of euro pound. This trade has gone against me. I've been wrong about the direction, wrong about the timing, and yet I'm only down 1%. How? Again, my trades are really tiny. I'm using really small size relative to my account, and I've stepped in, I've legged in, as they call it, dollar cost averaged in to a short position. Now, again, this type of move is the type of move that if you were inappropriately risk managing, you could blow your account on that kind of move. But with really small sizing, let me zoom out and show you the big picture for euro pound. This is a currency pair that typically over the long term chops back and forth. This is a currency pair. The two economies are reasonably correlated, the UK and Europe. And so if this thing were to keep grinding higher, is that disaster for me? Nope. I am willing, as crazy as it may sound, to see the euro pound continue to move higher against me. In fact, if that happens, I can get a bigger sized short position. I'm not currently adding to the trade because I don't necessarily love the fundamental factors right now. The euro looks really strong. So again, here's some common questions that I get on this. If you're dollar cost averaging, what does that mean? That means taking small short positions in bite-sized pieces over time. This is a long-term approach. It is not suitable for like trading the 5-minute chart. That's not what I'm doing at all. I am short the euro pound with small size in 3 different spots. And currently, I don't like the idea of adding more shorts to the euro pound. In fact, the edge finder is giving it a strong reading. So it very well may in the short run continue to trend higher against me. So then why am I not just accepting the loss? Well, because my position size is so small that I haven't really experienced any significant loss just yet because my size is so tiny. So if this thing continues to move against me, I can start winding out to the weekly chart and I can say, do I want to add new shorts? Not really, because the edge finder doesn't agree with it. But if we were to get, push up into this area, we could see some rejection. And if we started to get edge finder confirmation, I may actually add again to the trade. But right now I'm just willing to hold the position because it's so small. It's not doing any damage to my account. I have a short position. If it rolls over, I can probably get out of this trade for break even or a small loss. And that's what I'm going to try and do. I'm going to wait for some kind of price reversal. Most of the time, vast majority of the time in FX especially, FX is notorious for being choppy back and forth markets. If this thing rolls over, right, I can get out of my trade on any sort of real pullback in this market. So the difference here is that a lot of times when traders try and do dollar cost averaging, what they do is they go way too heavy. And when one move like this happens, they blow up. But with small enough size, this is what long-term currency trading looks like. A lot of times long-term currency trading is waiting for price to give you some sort of move back the other direction and just kind of trading that inventory in and out of your portfolio. So what I do in Forex is not particularly attractive to a lot of the day trading crowd and the Forex hype stuff that you see all over the internet. But I trade Forex in a way that has worked really well for me for a long time. I dollar cost average longer term, and I look for this move to move lower. I'm not always so early to the idea. A lot of times I take that first trade and capture a move, and I just take that and I move on to the next one. But again, euro pound, even though it's moving sharply against me with small enough size, I really am not phased by it. It's a small trade and I could add to it if I wanted to. I'm not going to. I'm just going to let it play out. And who knows, we might in the next month, we might get a sharp push lower, in which case I might be able to get out of this collection of trades that I've gotten out of. But it's definitely longer term focused. I also have a similar position that has gone wrong on CAD Swiss. The positive of CAD Swiss and euro pound is they give you positive swaps for holding them. So even though I'm sitting in 2 positions that have gone wrong on CAD Swiss, and I'm not super interested in adding a more to the trade right now, I'm still getting paid positive swaps. I've collected positive swaps every day since taking these trades, which it adds up. CAD Swiss longs over a long duration, the positive swaps that you collect, the credit that you get paid for holding this due to the interest rate differential between Canada and Switzerland is positive. So you get paid to hold this trade. You get paid to wait, essentially. So if we get some sort of sharp move higher on the Canadian dollar, I could potentially get out for break even on the actual price movement, right? 6,100. If I got to move to 6,100, I could take profits on this trade and take a loss on this trade be break even between the two longs, but make substantial income just from holding the positive swaps that you collect from this, right? So I'm making money on the swaps. And if the trade comes back to break even, then I can collect profits on that. Any thoughts on GU, Nick? Yes, I'm actually short GU, which came back into play here for me today. Believe it or not, I'm actually starting to tilt in favor of dollar bullishness. So let's talk dollar for just a second. I don't love the technicals just yet on the dollar. Like, I don't think we have like really strong technicals, but the dollar is shaping up, in my opinion, for a reversal. It's turning around, in my opinion, slowly. Let's take a look really quick at our economic heat map. So whether you trade gold, the dollar against euro or pound, whatever you trade, this might be interesting to discuss. So we had jobless claims yesterday. Once again, really strong labor statistics. We also, I want to get to Powell and Trump in just a second because there was something interesting there. Mortgage applications were strong. We had, let's see, what else? CPI, inflation, pretty mixed, right? You had PCE, which ticked higher, PPI, which ticked lower, and CPI, which ticked higher but was in line with expectations. So a little bit of a mixed sentiment for inflation, but not so mixed for jobs. Pretty strong for jobs. Non-farm payroll was better than expected. ADP was a miss, but then JOLTS was strong. Jobless claims were strong. Unemployment rate was strong. Wage growth, negative. Missed expectations. So the net aggregate is the US dollar impact on the economic heat map is actually officially tilting bullish. This is the first time in a while. We haven't had this in a while, but the US dollar economic heat map is actually tilting bullish, which could suggest that the dollar index may be in the early formations of a bigger reversal. We'll have to see, but we have gone from an expectation, like the market kind of got hyped up on the idea of 3 rate cuts this year. Now it's down to 2, and there's a possibility, right, that it could go to 1. We could see 1 rate cut this year. I mean, that labor market is really strong compared to expectations. Somebody asked me about the DAX and gold. I will definitely be taking a look at those things in just a minute here, guys. Thank you for your patience on it. So we'll see, but the dollar index may actually be, in my opinion, shaping up for a longer term reversal. Now, I want to be clear. The technicals are still bearish. We could very well see, price go back to test these lows. But I think what you'd be looking for, and what I'm looking for from a bullish perspective on the dollar, would be momentum to change directions in the form of a key breakout above this 99 level. I think that on the trade deal stuff, we have a little bit more security than we previously did. That could be a strengthening factor for the US dollar. We also have, I don't think personally, I could be wrong about this, but here's my opinion on the Powell situation. I don't think he's going to step down. There's all sorts of speculation going around about, is Powell going to step down from his role? There's actually an argument that he should for his own sake, because if the economy does poor, that the administration is going to blame him. And if the economy does well, then the administration is going to take ownership of that. So he's kind of in this sticky situation. If inflation goes up, he's going to get blamed. If inflation goes down, he's not going to get the credit. So it's a sticky situation for him. But I still don't think that he's going to leave his post. I think he's probably going to stick it out, and I don't think that Trump is going to remove him either. So I could be wrong about that, but that is my current opinion on that. And I think Powell remains more on the hawkish side, which favors some modest dollar strength as well. So when it comes to the US dollar, what am I looking to trade it against? Well, let's take a look. If I look at the economic surprise meter here, we have, give it a second to load here. If it wants to, maybe it doesn't. We're missing like 3. If we look at the US economic heat map, again, getting like a 60+% rating now. So here's US dollar, right? In terms of which currencies look stronger versus weaker, the US dollar actually is now getting into the positive territory. New Zealand dollar is still our strongest in terms of economic outperformance relative to expectations. The euro is also strong. The Swiss franc is also strong. Our weakest on the list are going to be the Canadian dollar and the British pound. So if I want to look at maybe pound against the dollar, what would be the dynamic here? It's not a huge separation, but I would lean just slightly short on the pound against the dollar. It would also hedge out a little bit of my exposure on the euro pound position, which I was talking about earlier. So if I go to pound against the dollar, right? We're sitting at support. Technicals, I still think favor the bulls here on a bigger picture. But if you get a breakout of these lows, that to me could signal that the pound dollar is tired and may be rolling over. Did you see the Trump tweet? No, Finley, tell me what the tweet was. The Powell situation looked like it really did. It looked like it was a it looked like AI generated when I first watched it. So look at this, pound dollar down 0.5%. We've got euro dollar just slightly softer here today. Dollar yen looking strong. Dollar Swiss franc. Dollar CAD is another one that I'd be interested on the long side if and only if we got some sort of stronger reversal on a higher time frame. So I'm looking at the daily chart. I'd be looking for something like this, at the very least, looking for signs of a true reversal, a stronger push in the opposite direction. We also talked yesterday on my video. I'm not sure if you guys saw this, but on the video yesterday, I talked a little bit about market sentiment on, I'm going to specifically look at major currency pairs for a second. And what we can see here is that crowd sentiment on things like dollar Swiss franc is still very long. Crowd sentiment on things like euro dollar is still very short. So there is still a, dollar long from retail sentiment positioning. So that makes me a little bit cautious to rush into getting long the dollar myself. We typically use on this channel, I talk about it often, retail sentiment as a contrarian indicator. So for example, this contrarian signal tab right here is showing you a contrarian bearish reading is generating for dollar Swiss franc because the crowd sentiment is very bullish. And on euro dollar, it's giving you a bullish contrarian signal because crowd sentiment is very bearish. So when we look at the currency world, we take a look at euro dollar, we take a look at dollar Swiss franc, these things are getting strong contrarian signals. Trump has recently said Powell's a good man. Interesting. Is that what the tweet was, Finley? Let me know. So anyways, that's a lot of currencies this morning. I hope the currency traders enjoyed that. At my core, I've traded currencies for a long time. I've traded stocks longer, but I've traded currencies since 2016, I want to say. I got like into it in like 2017, but I started in 2016, late 2015. Anyways, so let's take a look at the indices for just a second. Indices still sitting at all-time highs. Still not too much to do for me on this. Would need to see a pullback. NASDAQ, S&P, Dow Jones. I've been doing a lot of stock trading. I'm not going to do it on this stream simply because this channel is not really dedicated to individual stocks. I do have a second channel dedicated to them if you'd like to explore that. It is Trader Nick Stocks. Trump says there's a 50-50 chance of making deals with EU. Most deals done by August 1st on Fed's Powell. Got the impression yesterday from Powell that he might be ready to lower rates. Okay. Trump said he got the impression that Powell will soon cut rates. Okay. We'll see. Look, I actually agree that Powell should cut rates. I've talked about that a lot on the channel. I do think that by Powell's own discourse, he has mentioned that he thinks the Fed is still in a restrictive stance. Do we need to be in a restrictive stance? That is the question. Do we need to be in a restrictive stance? Well, ask yourself this. Is inflation flaring up? That is when you want to be in a restrictive stance. You want to put a box. You want to control the economy from growing too fast when inflation is getting out of control. So the question is inflation getting out of control? Is inflation getting out of control? That is the question that we have to ask if we're going to determine, hey, should we be restrictive? So again, step one, Powell has mentioned he thinks the Fed is in a restrictive stance currently. Step two, when do you want to stay restrictive? When inflation is on the rise and problematic. Is inflation on the rise and problematic? It's trending lower. We did get a slight uptick, but most things in markets, including economic data, don't always trend in a perfect straight line. The general trend of inflation is still in the direction of cooling. We're getting close to that. We're closer to that target inflation rate. We could have, a down spell in inflation. We'd be there. We'd be pretty close. So if the Fed says we're restrictive, if Powell says we're restrictive, and then we look at inflation and we say, why are we restrictive? Inflation is no longer nearly as much of a problem. That is where I think the Fed can afford to cut rates. Because why would you take the risk to hurting the economy by keeping interest rates too high for too long? We've not really moved very far from where we were. We cut by, I believe it's 75 basis points from the highs. We've cut, but not very much. We rate hiked into oblivion to deal with the inflation scenario. Inflation's now down. We should cut rates. Now, let me be clear. I don't think we should rate cut by like 2% or whatever. Trump has come out and said, oh, we should cut by 1 full percentage point. I don't think that we should do that. I think that we should cut interest rates until the Fed feels that we're not in a restrictive stance. Powell says we're restrictive. Inflation is cooling, which suggests we don't need to be restrictive. We should cut rates to the point that we're not restrictive. Where is that number at? Well, there's smarter people than me that can figure that one out, but it does mean lower. I'm not a genius, and I know restrictive means rates are high relative to where they could be. Then cut them where you think they should be, but cut them. That's my opinion on it. So what does that do? What does rate cuts do? Well, causes the stock market to go up. Stock market loves that. Causes the dollar to be a little bit soft. That has already kind of taken place. Gold likes rate cuts, right? Silver likes rate cuts. Oil likes rate cuts. I'm already positioned long on oil. Let's talk a little bit about gold. I talked about it at the beginning of the stream. Essentially, all I'm doing here on gold, still choppy, still going nowhere. I don't see a strong directional bias on gold at this time. If I go look at the Edge Finder, I believe we are getting a neutral reading currently on gold when considering sentiment, technicals, and economic data. Let me just go here. I'm going to go metals, and then I'm going to, I don't know why the Edge Finder is a little slow this morning. It is just chilling out. Okay, here is gold getting a neutral reading on the Edge Finder. So it's getting a +3 score. Sentiment is suggesting bullishness for gold. Technicals look overall good for gold. Economic data does not look great for gold. The U.S. economy is looking relatively strong. We looked at the U.S. economic heat map earlier in the stream. If you've been here, if you showed up late to class here today, then make sure to tune into these streams when we first get them started so that you don't miss anything. but we do this every single day. By the way, if you're, I know there's a lot of regulars in here, but if you're new, let us know that you're new. Drop a chat here. We do this every single day of the trading week. We show up, we cover economic data, we talk technicals, we talk trade setups. I invite you to consider subscribing, hitting the thumbs up button. So, you know, if you're on Twitter, follow the page that you're watching this on. We're streaming in 4 different locations. If you are enjoying this, come back and see us. We do this every day. We're here talking trade setups and ideas. So gold for me is a neutral reading. This means that I am not taking any trades on gold. I have a long position that I've trailed stops on, and I'm just kind of super passive on it. If it goes, it goes. If it trails out, whatever, I'm not going to trade it again. I have no strong conviction on gold in a bullish or bearish direction at this time. Thank you, Nick. You're changing lives. I appreciate it, Aaron. I mean, at the end of the day, I have a passion for markets. I hope to share that with people, and I can't do the work for you. And I'm not necessarily changing lives per se, because I am just doing what I love here, which is markets. And the biggest thing that I can do probably for 95% of my audience would be to help to reel in expectations of how hard markets are going to be to make money in, how much work it's going to be to make money in markets, and what realistic returns actually look like for profitable traders. If I could give you a good scope of what that looks like, I think I'd be doing a really good service to the trading space, because most of it is complete nonsense. Most of the stuff that you come across in social media, people are telling you complete nonsense because they've got something to sell you. I have something to sell you too, but my brand is built on what I believe to be transparency and being real about markets. I think that is why we attract a high quality customer to what we do here. So what you're looking at, right? This is what I sell. We build software tools for traders. This stuff is not very interesting to beginners and novices. The Edge Finder is much more interesting to experienced traders, and we target that as our target client. We are not looking for the get rich quick, you know, trade for 3 weeks and then quit because it's hard people. We are looking for people who are like, I want to go the distance in my trading. I want the right tools to do it. I understand it's an investment, and that is who we sell to. That is our target customer, is experienced traders who are ready to go to the next level. So full transparency, the transparency branding is intentional. It attracts high quality customers to our business. It does not attract novices. Trust me, the like super noob traders oftentimes don't like what I have to say, because I'm talking about making slow and steady gains and trading conservatively and watching the daily chart. None of that is exciting to beginner novice traders. They don't like hearing that. They want to trade the 1 minute chart, high risk, double their account in a week. But that's not what we do here. We do none of that. We are here to make money. And the real way to make money in markets is slow and steady. Let all the other people blow up, burn out, run through the markets as fast as they can. And many people watching have done that. I've done that. You learn from your mistake and you say, I'm serious about this stuff and I want to do it the right way. How do you do that? Slow and steady wins the race. When that clicked for me in my head, it was like full circle. As a kid, you hear the story of the tortoise versus hare. I reference it often in my videos and streams. That story means so much in markets. The hare, the guy who wants to flip accounts, chasing penny stocks, trading gold on the 1 minute chart with high leverage, those people inevitably, unfortunately, we're not excited about this, but reality hits them hard. They blow up, and the tortoises are the ones that win the race. The people who go slow and steady. They're conservative in their risk. They only take proper setups. All of this stuff, I'm telling you, that is the way. It is the way to make money in markets. Listen to any experienced trader with credibility, with track records, with live brokerage logins, with, you know, managing millions and billions of dollars. Listen to those people, and you are going to hear more of the same. You can find the people on social media that will lie to you and tell you that you can double your account if you buy their course, or you're going to find that stuff. It's all over social media. There's no shortage of that. So anyways, I invite you to continue on this trading journey with me. Come back to the live streams each and every day. We are here spreading realistic, slow and steady, wins the race trading. That is what it's all about on this channel. And again, I've been doing this. I've been streaming on YouTube since 2018, man. I've been doing this for a long time. That's a long time. This is like my full thing. This is my career. Trading every day on the streams. You win some, you lose some. Over time, we've done really well. We're not talking about making billions of dollars from the market or 50% per month. None of that. We're here to do something conservatively, repeatedly, consistently. That's what we do. So subscribe if you haven't already. Yeah, check it out. Flipping accounts is a skill for sure. I've done it before 2,000 to 27,000. Just blow it all up the next month. So here's the thing, Patrick. So I would actually say that flipping accounts is not a skill at all. I would actually say that anyone can throw it all on red and hit a win sometimes, or anyone can make a low probability but high payout bet at the casino and get lucky. But real trading is not about luck at all. Real trading is about stats and small wins and compounding and, you know, high probability setups, right? Like, I think, is there some skill in placing great trades? Yes, but people overestimate how well they can predict the markets. Even great traders are not great at predicting every single move. Again, it's a fallacy that you can think like, oh, I can turn a small account into a lot of money because I know what the market's going to do. You have to know the market's going to do perfectly if you're going to flip accounts, and nobody actually knows for perfect, you know, clarity on what the market's going to do. Educated guesswork is all great traders can do. So my opinion on it is actually flipping accounts is not a skill at all. It's a complete gamble. What is impressive to me? So here's the thing, right? I go on my FX book sometimes and I scan people's trading systems, and I actually do a specific criteria on there. You know what? We're going to show it because I think this is a really good case study. myfxbook.com. So if you pull up myfxbook.com, which if you're not a Forex person or a CFD brokerage person, myfxbook is a tracking site. So I don't trade on a CFD brokerage. But if you do, if you're outside the US especially, this site is really cool to check out. This is not sponsored, but should be. If I go, where is it? To systems, right? And I just want to search for systems. Strategies, what am I looking for? It's been a minute since I've done this. So if I want to search for systems, is it this? They used to have a filtering thing. Maybe it's changed since I've been here. Oh, here it is. Okay, on the far right, look at this. So here is what's impressive to me as an experienced professional trader. This is what I actually am impressed by. Gain. Some people are going to come in here and they're going to say, I want to see a gain of at least 200%. Flip it around. This is what's impressive. To me, I want to see a gain at most of 100, let's say 150% at most. I want to see an account that's, don't show me an account that's up 6,000% on an unregulated brokerage. That's not impressive. I want to see a drawdown that's at most 25%. Profitability, at most, show me 5% per month. System age, show me at least, let's say 2 years, right? Click apply. And I could tell you this search that I'm doing, it's loading for some reason. This criteria is real trading. If you have somebody who for 2 years has generated some decent returns, why did that only show up with one? I know there's more than that. At most, drawdown. Let's try maybe making it profitability at most 2%. Let's just go 1 year then. That's weird that it seems like their system is buggy. They've changed something on the system search. This used to look different. What's up, Isaac? New subscriber. Thanks for being here. Okay, this thing seems to not be working properly on this website. The point is, right? Okay, yeah, this is just not loading. The point is, Systems that are making slow and steady, consistent gains over long durations of time are far more impressive, in my opinion, than somebody who speed racer turned $100 into 1,000, because at any point that could blow back to zero. Yeah, I mean, that's exactly right. The thing is, people want to escape their job, so we aim for 200%. And that's so valid for like why people do it that way. But what the markets tend to do is they rule out people who are just interested in making money. And the only people who actually make it in the long term are people who are actually genuinely so interested and willing to work hard markets. Because you're going to hit a pothole along the way. It's going to cause you to have a big drawdown, and most people are going to quit in that situation. And if you're risking like crazy, you're going to blow everything in that pothole. It's like it's guaranteed to happen. You're going to have big drawdowns, even with conservative systems. So if you're trading a heavy risk system, you're guaranteed to blow up with enough time. That's just, again, it's the reality of it. So let's take a look here at things like the Russell, SPX. I talked about SPX. Like, these things are just not pulling back enough for me at this time. I do want to take a look at the DAX. I mentioned I would be looking at the DAX. German DAX fell off the list here, but let's just go look at it. German DAX, I have my eye on this level here, around 24,000 or so. Price is getting pretty close to that area. Let me go see what's going on with the DAX. Indices only for a second. Did the DAX must have gone neutral here. Yeah, what happened with the DAX? Sentiment is costing the DAX right now. I'll have to look closer at that. Targeting 2% a month is so relaxing. It's so much less stress. I'm telling you, people who are going like, I gotta make, this trading's only worth it to me if I make 15% per month. Well, then don't trade, because you're just gonna blow your money up. You're gonna chase something that's unrealistic, because in your head you're saying it's not worth it to me unless I make 15% per month. Well, the market doesn't care if it's worth it to you. The market does what the market wants to do, and trying to be so accurate in markets to make 15% per month is going to get ugly fast. Again, sometimes people hear that and they hear me being like pessimistic. I'm so optimistic on markets and trading. I think we're in a golden era of trading for a lot of people. Data is more accessible than ever for people. Tools are all over the place to help traders to be better. I'm very optimistic in what you can do in markets, but setting first boundaries and expectations that are appropriate is the key to profitable trading. You can do really well with 2 to 3% per month. Like, you can do really, really well with that. Applied over a long period of time, that can make you incredibly wealthy. It's not going to do it overnight. If you're looking for overnight riches, do not touch the markets. It's not going to work for you. Unless you get really lucky buying some, fart coin or something random like that, right? That's not going to, but that's not something that's repeatable. We're here, most people are here in this stream because we're looking for repeatable consistency in our trading to compound wealth over time. Why are you long on oil? So it was a bullish reading. It's not a bullish reading anymore on the Edge Finder, but the strong economic data out of the U.S. And actually most places, like, I like the idea. Check this out. So look at this. This is really cool. We have this new feature within the Edge Finder's economic surprise meter. It is the average economic surprise score. Now, what this does is it looks at our major 8, right? The US, the UK, Europe, Japan, Switzerland, Australia, Canada, and New Zealand, the big 8 major currencies. And we look at this and we say, okay, what's the economies of the world generally doing right now? Higher scores represent upbeat expectations were beat, essentially, in terms of jobs statistics, economic growth statistics. Keep this thing really simple for a second. A high score just means New Zealand, for example, is upbeat relative to expectations in some of their economic data releases recently. But then we built a cool little feature, which is the average economic surprise score looking at all of the 8 majors. And what we can see here is that we have a situation in which economies of the world are holding up better than people thought they would. So we have a high average economic surprise score. What do strong economies do? They grow. What do growing economies demand? They demand energy. So oil to me looks attractive for that reason. We've had some upbeat economic data. Rate cuts seem to be in line or coming down the pipeline. Those are good things for stimulating economies and for growth. So I do like the trade on oil. I did take the trade when the Edge Finder had a bullish rating. It's now gone neutral. So I'm just going to hold on to the trade, let it play out. Here's my situation on oil. It is pretty much flat, has not moved very much. I do also own some energy stocks, and I have sold some cash secured puts on some energy stocks as well. So I do have a net bullish positioning in energy in general, and think that it could be a strong performer. Just a quick look at some of the stock market side. XLE is the energy ETF. Energy ETF still very choppy. I do think that this has potential to break 2 new highs. It's a sector that has been relatively less attractive. You know, you compare this to like technology, for example. Technology has done really well. You know, XLF is financials, right? These are banks and services in the financial world, done really, really well. What else has done well? Here's one that's not done well is healthcare stocks, right? Healthcare stocks are underperforming this year pretty big. So I actually think that some of those underperforming ones, XLE and XLV, right, healthcare and energy, could be a nice place that I'm looking for some opportunities to buy individual stocks. I'll talk more about that on my second YouTube channel, Trader Nick Stocks, if you're not in there watching. I just did coverage on Google and Tesla earnings. It was some fun videos on that channel recently, so check it out if you haven't already. Nick, what about the DAX? Andre already talked about the DAX. I'm interested potentially in this 24,000 level, but I may actually pass on it simply because the Edge Finder reading is not bullish at this time for the DAX. As far as I checked, yeah, DAX is getting a neutral reading. I'll go look at that. If there is a setup on the DAX, I'll take a trade and I'll share it in the Discord group. If you don't have access to the Edge Finder and want a copy, do not miss the chance. It is currently on super sale. It's 45% off for a limited time. If you do not have a copy, the Edge Finder helps us to scan a huge selection of market data. If you are somebody who sees yourself trading for 2, 5, 10, 20 years from now, make sure that you have the right tools to do so. This is an investment. I understand it is a paid product. It's not something that's available for free. Oh my gosh, you got to pay for it. We've invested a ton of time, energy, money, and team resources into building what the Edge Finder is today. And I think it is worth every single penny. And especially now with a 45% off discount, this is the biggest discount offer that we do all year long. If you are not using the Edge Finder but want to be, do not miss the opportunity. We just dropped a link here in the chat to where you can speak directly to our support staff about getting a copy set up today. You get 45% off the tool, and for a limited time, we're also splitting it up into 3 payments for those who need to do so. Some people are like, I want the Edge Finder. I don't want to miss the sale, but can I split it up? Well, we are currently offering to split it up into 3 monthly payments to make it easier for people to not miss the sale. So if you have any questions about that, take a second, click this link that just got dropped in the live stream chat to speak directly to our support team about getting a setup with a copy of the tool. I don't think we have anybody else coming here as far as I can tell. We were supposed to have another stream host today or guest, but we haven't heard from him, I don't think. So we're going to probably call it here, I think. Let me just double check. I think we're good. Okay, guys. If you enjoyed today's stream, make sure to hit the thumbs up button, subscribe. Like I said, don't miss that sale. It is the biggest discount we do all year long on the Edge Finder. Get access to all of our tools and resources for limited time. Where's Alan gone? So Alan took a job at a brokerage, and that does limit his ability. Brokerages are, there's all sorts of compliance involved with working directly for a brokerage on what you can do content wise. So Alan has taken a step back from content for now, and he's evaluating what he wants to do next with it. So hopefully we'll see him again at some point, but it is an unknown for now due to his day job. So with that said, thank you guys very much for tuning in to today's live stream. Have a wonderful weekend, and we'll see you back on Monday.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.